Hi there, everyone. Welcome to another Ainslie's Gold Silver Standard Insights. And if you're watching for the first time, welcome too. I am your host, Joe. As always, we have Chris Tipper here to break down the morning's news posted on the Ainslie website. And joining Chris today is our regular contributor, Alex Hutchinson from Siltec Precious Metals. And today's topic is about China facing multiple attacks on its currency. Welcome back to the show, Alex. And Chris, over to you.
Thanks, Joe. Today in the news, we turn our focus back to China, their economy generally, and specifically their currency, the yuan. China is the world's second largest economy, but of course, what happens in China has additional relevance to us in Australia, as they are by far the biggest consumer of our largest exports, especially the commodities. So we always need to be paying attention, as we will most certainly feel the impacts if things get out of hand. Currently, China is battling multiple challenges, some short-term that are likely to resolve themselves within time, but others are long-term and structural with no clear indication of how they can be resolved. As pointed out in the news piece today, the timing of these challenges all coming to a head, however, could not be at a worse time for the global economy. The yuan threatens to significantly devalue right as the US dollar continues to cause problems with sustained strength. The extended drought threatens food supply and even higher prices on the back of global inflation already creating chaos. Dried up watercourses vital to the nation's hydroelectric power generation has seen the imposition of rolling blackouts and forced them to head back to coal at record high prices. So both are major impacts on GDP. And of course, then there's the impacts of the zero COVID policy and a property crisis on top of all that are both applying additional pressure to GDP growth. So there's a lot to think about here, and it's great to have Alex back with us today to help break it all down. So let's dive straight in. Alex, on the back of some of these big issues we know are impacting China right now, why doesn't China appear to have the same level of inflation as the US does?
So there's a lot of reasons that this is going on. So I'll just list them. So the first one is when the US and Australia was giving all this stimulus during COVID, China didn't do it. So there's not extra debt. There's not extra money floating around in their economy. The second reason is they've still got these rolling lockdowns. So they're still going through what we went through, a year ago now, really, or the beginning of this year. The third is the US dollar strength has actually devalued some of the commodities. We've obviously spoken about that with gold and silver and what's been going on there. So that obviously assists them as well. Fourth, we've talked as well about some of the arbitrage contracts they'd be getting out of Russia for petrol and gas right now. So they're probably buying some of these commodities cheaper than the rest of the world. But lastly, and this one is the one that I find the most interesting, is their CPI basket is actually quite different to, say, the US that's got all this inflation. Now, China doesn't, they don't tell anyone, it's not publicised what their CPI, but there's conjecture as, a whole heap of economists have weighed it up and decided that what it's really made up of is rent at around 16%, whereas the US is at 32%, transport at 10%, and again, the US is at 15%. So just taking those two figures out, we've talked about what's been going on with those figures. Petrol prices are up because of what's going on in Ukraine, but the CPI in China is weighed about 50% less than the US for those particular items. The interesting one, which hasn't come through, which will now come through, is food. So China is around 18.4% food, whereas the US is about 7.8% food.
That's a pretty big disparity in those two numbers.
Well, even more interesting is the breakup of the 18.4%. So pork actually makes up around 2.4% of the 18.4%, so around 15 to 20%. And those prices have actually fallen 34% year on year. So it's actually been dragging down that item. Now, the article today that Ainslie is talking about is the drought. Now, it's well publicised. Global warming or just seasonal, no one knows yet, but probably the latter. So this drought in China is going to drive up food prices. So it'll be interesting to see. This inflation, I'm not sure, can be held down much longer. Grain feeds through to pork, and then you've got all these other items that will be making up the food CPI, which make up a huge portion of the CPI basket for China. So we'll see what happens.
That's really interesting. I didn't know that about that. I mean, that's quite some significant differences in how they calculate that CPI basket. But I suppose if the inflation, at least so far in China, has been somewhat under control, even if that, like you said, is coming from different approaches perhaps to how they measure it.
Yeah.
What impact will it have on China when we do actually see some of those high levels of inflation from the US and elsewhere around the world, let's face it, eventually flow through into their sort of economy?
Well, I mean, you hear the RBA and the US Fed right now, all they keep talking about is unemployment. It's able to sustain this higher inflation. So you've got record low unemployment at historically low rates for both Australia and the US. And that allows the economy to sustain higher inflation rates, interest rates.
Yep.
What'll be interesting in China is, you've got right now the IMF has downgraded the rate of growth in China to 3.3%. You've got Barclays and Nomura banks talking 2.6%.
Mm-hmm.
And then we need to look at what the actual unemployment rates are in China at the moment. They're saying that in urban areas, unemployment rate for the age group 16 to 24 is around 20%.
Oh, wow.
So if this inflation goes up, there's not going to be the same buffer that the US and Australia have right now to hold back, to lift the interest rates. And, similarly with the property market, I mean, you could read any newspaper right now. They keep talking about China's property market collapsing. Well, it hasn't collapsed that much. I mean, China's economy is three quarters, a bit more of the US economy size, but its property portfolio is still 2 times the value of the US. So it's already come off, and there are all these cracks. They're talking about 40% of developers in China under huge strain. So you can't lift interest rates any further. And then on top of that, you've got the inflation coming in because of the drought and because of what's going on in the US with the yuan pegged to the US dollar. So they're going to have to devalue it. But again, that's going to create more inflation. So it's going to be interesting.
Yeah, and there's some fascinating numbers there. That 20% youth unemployment in those urban areas, that's something I wasn't aware of either. And that's a fascinating in itself, because you think about young people, they're probably generally the people who are going to be most politically active, for example, if they can't get a job for an extended period of time. So that'll certainly be something to watch. And I suppose when you factor in demographics as well, on top of all that, and it was discussed in the article in a bit more detail, but reflecting on what you just said about your hands being tied, they really will be, because it says in the article, you've talked about some of the short-term pain, but the longer term, things like the fertility rate, as just one example, really, that takes decades. You can't just flick a switch to adjust the fertility rate. That takes an adjustment in people's perceptions and thinking and what they want. So it really doesn't paint a great picture in the short term, but also there's longer term impacts as well. So I agree with you. There's a lot the Chinese economy will need to address over the short and longer term, really. There's a lot there, isn't there?
Yeah, no, it's going to be interesting. Looking at some of the figures I was reading today as well is around what's going on with the flight of capital. So being in precious metals, we do hear that things are getting a bit harder in China at the moment. The premiums being paid on precious metals are generally a little bit higher, and it's a little bit harder to find stocks in China. What's interesting is looking at what that could possibly be from. In the last 6 months, there's been about a 20% drop in overseas capital investment in China. So I think it's gone from about 650 billion to 520 billion. Now, if you also factor in all the trade surpluses that would be over the top of it, there's actually been a flight of capital out of China. They're sort of saying about 350 billion. And looking at what's going on in the precious metal market, I just wonder if some of that's being pushed into there and pushed back out of the country.
Fascinating. And does any of that apply to, there was an article that we talked about on the Ainslie website with that new Russian gold exchange? Do you see any sort of potential for that to be in play here as well?
Well, I'm sure that's going to take up some of them. China and Russia have just announced that they're going to start, buying the petrol, the arbitrage that we were talking about. So, having that gold exchange, maybe a lot of it's moving there. So I don't know where it's going, but it's not as plentiful.
Fascinating. Well, thanks as always for helping us to explain all of that today, Alex. I learned something new. I've learned a few new things today that I didn't previously know every week when we have you on. So we really value your time and perspective. So thank you very much.
Well, thanks for having me again.
Well, thanks as always for joining us on the show, Alex. We love having you on. And Chris, I'll see you next time on the next GSS Insights. And for you, the audience, we'll get you to head over to the Discord channel. It's the perfect way to continue the conversation. I'm going to share the screen right now. If you head over to discord.gg/gold, that's discord.gg/gold. Straight after we upload this video, Chris Tipper is going to be on the Discord channel answering your questions. It's a great way to continue the conversation and to also talk with other like-minded individuals just like yourself. And of course, I'm going to get you to hit the big red subscribe button to the Ainslie Bullion YouTube channel, youtube.com/Ainslie Bullion. And as always, head over to goldsilverstandard.com, bringing gold and silver into the digital world. As we say here at the end of every GSS Insights, balance your wealth in an unbalanced world. Take care, and we'll see you next time.